It looks like Grant Cardone has stolen hundreds of millions of dollars from Cardone Capital investors. The federal authorities are investigating. Time is running out for Cardone Capital, and if Grant Cardone avoids prison, it will be a miracle. Hi everyone, Aaron here, and welcome back to the channel.
All right, folks, Lane here from SimplePassiveCashflow.com, and I'm going to start with some of my credentials. 8,500 rental properties, $1.2 billion. I'm also a real estate syndicator, so I think I can break down this video a lot better than some of these other YouTube people out here who these guys seem to hate Grant Cardone. I think Grant's all right. He's a great marketer. Let's put it that way. But this video is not to be taken as anything legit. I just thought I'd make a fun video here, just offer some of my insights and commentary, being a syndicator and sponsor too.
So I told you guys a few weeks ago I was going to do a deep dive into Cardone Capital. I want to start by showing you the guy who first caught on to Grant Cardone's scheme, and I want to show you what he said about it. Real estate investor and YouTuber Kevin Paffrath, known on YouTube as Meet Kevin. He first caught on to this scheme and reported on it 2 years ago. Here is what he said about it on his channel.
This is a deal that Cardone Capital...
So first off, Kevin guy, Meet Kevin, his YouTube channel, it's a pretty popular channel, but he's got like a huge beef with Grant Cardone. I think there's something where he went to his Grant's headquarters in Florida, and he kind of was going to bring him flowers, and then Grant Cardone did a cease and desist on him, said he was harassing him. But for some reason he has a big beef, and I think he just puts him on his channel because he can kind of ride the coattails of Grant Cardone, because Grant has a big internet presence. But you know, that's Meet Kevin, and I think some of Kevin's stuff is kind of cool, like, you know, how he breaks down some of the returns. But you know, Kevin's not a syndicator. He's not a big. I think he flips some houses and stuff like that. But some of the stuff aren't exactly right, and I'll try and identify some of those in my commentary here. And some of you guys listening live here, feel free to put in some comments or questions, and we'll try and get to it too.
Just bought. Here's the deed showing the purchase price, just under $134 million. Yet on this pamphlet, it says that their equity is $39.4 million, which is supposed to represent 25% equity, which means they're saying the building is worth $157 million. The form says at acquisition, this was their equity. Are they trying to deceive new investors, or what's up with this?
Well, it looks like deceiving new investors is exactly what Grant Cardone was trying to do. And not only that, it was part of his scheme to convert his investors' capital directly into personal profits put into Grant's own pocket. The deal that Kevin mentioned there was a project called Columbia Town Center. This was a project that Grant bought in December of 2019, and Kevin was reporting on it in March of 2020. And as they say, if you see one cockroach, there's probably 100 more that you can't see. It occurred to me that if Kevin was finding this deal in December 2019, just months after the deal occurred, then why don't we go back to the very first deal that Grant Cardone did when he expanded beyond the scope of just investing for friends and family and started raising money from accredited and unaccredited investors. Why don't we go back to that point and examine every single deal between when he first started and the deal that Kevin found in 2019.
So some people who didn't understand what was going on there, basically, you know, on the PPMs or the investor disclosures, when he puts out a deal, he's saying that the acquisition price is actually higher than he picked it up for. So maybe he bought a property for 90, which he put his own money and closed the deal, like kind of wholesale, but he may say the acquisition price is 100 to his investors, which I think these guys are kind of beating him up a little bit. And, you know, as much as it may or may not be ethical, him doing that, if he discloses it, then it's legit, is my assumption, is in my opinion. Again, I don't think it's super ethical if you do that. But then again, you know, if Grant's putting in all his money in the beginning to lock up a deal, there is some value of that, you know? So like a lot of times, some of these deals, the reason why they're getting it for such a good price or even getting it is that he's putting his money in first. Now, I don't really know where he gets that money from. I mean, I'm sure he makes a lot of money from all his marketing activities, etc. that maybe he that is personal funds, but he puts it in and then he can get it at a low price. Now, the entrepreneur side of me says, well, if because he's getting that better price, he should take it. And he is legal here, though. He is disclosing it, what it is, though. But I think where these guys, kind of go after their pitchforks and knives after Grant, which I just think is a little excessive, is they say that it's really unethical, or it's illegal. I don't think
So that's exactly what I
illegal.
did. Between September 2016 and December 2019, Grant Cardone purchased 13 deals that he then sold to his Cardone Capital investors. And depending on which purchase price you want to use for each property, whether we're talking about the actual purchase price that Grant Cardone actually paid, or the false inflated purchase price that Grant Cardone told his investors that he paid.
So again, simple word choice here, right? Like, these guys are kind of bashing on Grant, probably so they can just get their own videos up there in the YouTube rankings and the algorithm. But if he discloses it, that he's buying this property for 22.8, he can upcharge it for what he's want. And likely there is some factor of he's coming in with money and he's getting it at a lower price because of that. Cash is king.
The total purchase price of the 13 properties was between $1 and $1.1 billion. Grant Cardone and Cardone Capital does not disclose the actual purchase price of these properties to Cardone Capital investors. And the information I'm showing you here has never been seen in public before. So how did I get this information? Well, doing this kind of research is literally my job. My company, OTG Research Group, does work for hedge funds, investigating and finding criminal and unethical behavior on behalf of usually publicly traded companies. But looking for this type of fraudulent behavior and doing the kind of work required in order to find the information is my specialty. Grant, and Grant, I'm talking to you directly because I know that you watch my videos, because your friends talk to my friends, and I hear how much you've enjoyed all of the videos that I've been doing about you recently. So let me just say, man to man, one of the biggest risk factors about operating a company based on greed and fear and intimidation is that your employees, they just don't really like you that much. You can be sure that as your employees are looking for other employment, they are enthusiastically collecting up every single bit of evidence that they can to share with the authorities and to bring your operation down. And Grant, you must be the only person at Cardone Capital who is unaware that you've been under federal investigation for well over a year now. And I'm really just giving you the benefit of the doubt by saying you must not be aware. Because if you are in fact aware about the federal investigations that are ongoing and how long they've been.
All right. Well, there's a couple of things there that this dude is kind of commingling. First off, it's the, he's talking about those federal investigations. So my understanding of what happened is that he did like a Reg A Plus offering. And this is why a lot of syndicators don't like to have non-accredited investors, because non-accredited investors can be quite a pain, right? It's, they're saying that he didn't quite disclose, their returns that they were not getting. But in all the disclosures, it's like, hey man, this is an investment. It might be a preferred rate of return, but even preferred rate of returns is up. There's a risk involved. And this is where you bring in people at $5,000, $10,000, and that's their entire life savings. They're non-accredited investors and non-sophisticated investors in a Reg A Plus offering, or some people will do 506B offerings. That's what you get. And what I've heard is the person who started the class action lawsuit and rallied up everybody up were were some trolls out there. So I don't know. Again, I'm not taking one side or all. I'm just kind of saying what I'm hearing. And I think it's a little unfortunate for a guy who's such high profile, and he kind of markets them. He kind of like does it to himself in a way. I think, the flashiness, a lot of people don't like that, which is always why, way we kind of market ourselves. We always try and be very transparent with our investors and treat them right. And if we don't have a good cultural fit, then we just don't work with each other anymore. And we work with people we know, like, and trust. And then the other thing this guy's kind of talking about is, he's saying that he's not disclosing or it's illegal. Again, like I mentioned earlier, it is kind of totally legal. You're disclosing it as he is. And then, what he was also saying earlier about the employees don't like him. Well, that's kind of true, right? So in the beginning of the pandemic, Grant, if you Google this, February, March, April of the pandemic 2020, Grant let all of his employees go. As some people think it's heartless, but other entrepreneurs, business owners understand that your overhead is your biggest expense. And as much as I personally think that in tough times, that's where you really build the social capital with your employees and your staff, keep them on board, even in tough times. Grant made the business decision to cut them all loose because, quite frankly, a lot of his guys are just the sales guys and the marketing team. A lot of the long-term folks stayed on for the properties. I don't know if he does it in-house. I don't know if it's third party, so I'm not going to speculate here or there, but a lot of times that's kind of considered under the assets overhead. So technically not his guys, but there are a lot of people who, again, they don't hate Grant Cardone. They just hate him and his brand. And it is what it is. Either you love him or hate him is essentially how it is. And all he's doing is playing the game and evoking people's emotions, kind of like how Donald Trump did in the election. And he wanted the votes, or in this case, Grant wants your money and he wants you to invest with him. So he's trying to invoke that emotion in people by being polarizing. But there were a lot of people that thought it was kind of spineless and messed up to fire all of his employees. And they kind of also thought that, why is he firing his employees? Is it because the deals aren't going well? Again, that's what happens with non-sophisticated investors. They hear something in the news and they get all riled up. But, that's kind of what this guy was kind of talking about, or at least what I heard as somebody kind of in the industry. But again, I don't want anybody to sue me. I don't Grant to sue me. Grant's got, respect for you, man. Just dig my own opinions for what it's worth.
Been going on for, and you have continued to publicly raise funds from new unaccredited investors without disclosing this risk factor that you're being investigated by the feds. Well, that could be a whole completely different can of worms for you as far as legal risks and lawsuits and possible charges some point down the line. And if you are one of the few Cardone Capital insiders who are not yet cooperating with the federal authorities in their investigations, you very seriously might consider saving your own ass while you still have an ass to save. And if you're a Cardone Capital investor, you very much might want to consider consulting with an attorney, get yourself a lawyer, contact the FTC, contact the SEC, contact the FBI.
This guy's just rattling off stuff he doesn't know, obviously. So, but part of it is right. If Grant really has this pending investigation, and it could just be an inquiry, we don't know, for full-blown investigation, we don't know, right? And this is where this guy is he's kind of going down a rabbit hole, obviously. But if somebody has been hit and they've done something bad, like raised capital illegally or some and for example, generally soliciting to non-accredited investors and then letting them invest, and it not being a Reg A Plus offering. In this case, I know Grant did the Reg A Plus offering, so it's totally legal. But anyway, if Grant is really under investigation, he does have to disclose to new investors coming into his deal that yes, this is ongoing. Usually that's thrown in the disclosures. It's probably the case. This probably this guy didn't even read this stuff. Probably, our investors probably have, if you guys invest with the Grant, maybe drop a comment in our private group later on. Have you seen the disclosures? But likely it may just be an inquiry. And that's where personally, I'm just going to say, I don't know what are the legalities of it, but that's just, I just want to layer that on top of kind of the slander that's being put in out here.
No matter what federal investigations are already ongoing or how many Cardone Capital employees and investors are already cooperating, it's never a bad idea to lend your voice to the chorus. Let me show you some of these deals, and I want you to see how Grant has made an order of magnitude more money by front-running his own investors than he has made based on the incentives that he gets paid on from Cardone Capital. So Reserve at Port St. Lucie. Grant's personal purchase price, he goes for $19.5 million. He buys this property. He then sells the property to Cardone Capital investors for a 17% markup, $22.875 million. He personally profits over $3.3 million. Those are profits that belong to Cardone Capital investors. These
Whoa. No, that is not profits to those investors. Those are profits because Grant put in his money. I mean, he probably has 200 grand, 300 grand lying around to do this because many of these are simultaneously going on. So part of that you can see as kind of holding costs onto him. But what that man just said is wrong. And I'm not a huge Grant Cardone fan, but I'm just going to say what is right. But that is not entitled to the passive investors because the passive investors didn't come around until, Grant acquired the property.
These are the prices that Cardone Capital marketed to their investors in the prospectus for each one of the deals. This is the difference between the actual purchase price and the marketed purchase price. And this is the profit that Grant Cardone has personally made front-running his investors on all of these deals. Now,
I watched this video and I kind of thought to myself, well, this seems not super ethical, but it's actually pretty legal. I personally don't do this. It gave me the idea. So I don't think I'm going to be doing this, but again, it's pretty legal. And if you look at this Iona Lakes one, he barely made any money on that. I mean, that's probably just his coding costs or his hard money costs, which is totally legit, I think. I mean, if you're going to have $200,000, I mean, just do the quick math. $200,000 at 1% a month, that's 20 something grand at least, right, of holding costs. Some of these deals could take three to 6 months to close. So you multiply that by 6, that's like 100 something grand. I mean, I guess there's, it's a little bit more than that, but some of these may be pretty egregious, 17% delta. But to me, like, if you can make the deal work and sell it to his investors, I mean, that's what all that sophisticated investors, including myself, look, it doesn't matter what all this stuff is. It's what do investor get? Because that's the product at the end of the day. It doesn't matter that this guy's saying that entitled. At the end of the day, it's like, what does the investor get? Is it a certain equity multiplier or a certain cash flow? Most times it's a certain equity multiplier at the end of the business plan, either that 3, 5, 10 year in the future. So what they pick it up for doesn't matter. At the end, the hard thing about these investments is this deal sponsor syndicator, in this case, Grant, he has to hit us. He sets an expectation. He has to hit it, and if there's upside, the passive investors also take that upside too, after all this initial closing is over. So, I mean, if Grant can mark a property up $5-10 million, take that on the front, really, how is that different than an acquisition fee? Or and if he can still make the numbers work, well, damn it, the man's good then, right? Now, I'm not invested in Grant's deals. I haven't seen the P&Ls and rent rolls. None of these guys have. None of these jokers on YouTube have, right? This is why we personally mark all our deals confidential. We do disclose some of that information, but none of the hardcore, running 2 years of financials, right? But like you don't know. A lot of these guys don't know really how these deals work, and I think that's why you're having a lot of these types of videos like this.
Now, the way Grant Cardone is supposed to get paid from Cardone Capital, his incentives are supposed to be, he gets a 1% transaction fee on the purchase price of every property that Cardone Capital buys. Now, Cardone Capital investors don't actually understand that the only person that Cardone Capital ever buys a property from is Grant Cardone himself. I want to show you what that 1% fee would look like in total on all of these 13 deals. Based on the price advertised in the prospectus, the purchase price of all 13 of these deals is $1.115 billion. The 1% transaction fee on all these deals comes to $11.1 million. Not a bad payday, but reasonable and legal and disclosed to investors.
But what this guy doesn't realize, you know, people have been investing in syndications for a while. You know, Grant's kind of on more of an institutional level. I don't know their track record and experience, assets under management to be a fact, but you know, normally institutional operators, your acquisition fee, which can be a composite of all these BS fees that essentially is all summed up to be the acquisition fee. You know, typically a lot of these guys are running in the 3 to 5% range, so 3 to 5 times more than this. And this is again where, you know, Grant's just, you know, he's just playing a cup and ball game. You know, it's whether it's an acquisition fee or, you know, him just, you know, marking it up in the beginning. It makes no difference to him. It's just in this case, you know, I think a lot of semi-sophisticated investors, they sharpshoot, what's the acquisition fee? Because I don't want my sponsor taking my money, you know? And in this case, he's kind of downplaying that 1%, but he's taking it elsewhere, right? But if you include all the money he's making, maybe he'll talk about it later, but I'm just going to do the quick math. So that's, yeah, he's making like 10% acquisition fee, which is kind of in line with institutional operators. Well, maybe it's a little more actually, but you know, it is what it is. Like I said, it's what does the investors get at the end of the deal, right? That's really all that's really important.
Grant made over $110 million of profit directly into his own pocket just by front-running his investors on the deals that his investors believe he's out there finding for them. Now we finally know what Grant means by 10x.
Yeah, this guy is totally right. I like that joke. I'll give him props for that one. But you know, Grant, the acquisition fees are a little bit higher than your normal institutional operator, but you know, I mean, that's, you know, investors need to read the disclosures. And you know, what I do is when I look at PPMs, you know, even if it's on my own, I always go Control F fees and just spot check it. But know that at the end of the day, it's more what is the sponsor kind of semi-promising that he's going to do with my money.
It all makes sense now. He means you can make 10 times more money defrauding your investors than
Not
you
defrauding.
can by
Yeah, not
actually
defrauding.
working for your investors. I finally get it. Now, guys, these are just the deals from September 2016 to December 2019. This is where I decided to stop because this is the deal that Kevin found. And so I stopped at December 2019. Grant Cardone currently says publicly that he controls about $5 billion of real estate. We can see here that back as of December 2019, he only controlled about $1 billion of real estate. So when I say Grant profited $110 million by front-running his own investors, guys, that was $4 billion ago. I have no reason to think that Grant's business model has changed since December 2019, and I guess I'll put it out to you guys. If you're a Cardone Capital investor, did you get a disclosure telling you that there was a difference between Grant's purchase price and the purchase price marketed in their prospectus? Did you receive any disclosure on this subject at all? If you have, and you'd be willing to share it with me, I would be grateful for it.
You know, I don't think there's anything in the disclosure that specifically says it, but it's general enough to protect Grant more than likely. So I'm pretty confident. Again, nothing's illegal here. But you know, like, you know, Grant came on the scene. What did he say? 2017, 18. He picked up $1 billion in assets. You know, especially when you're picking up those high cost type of ones. But you know, he's a relatively new operator, right? I mean, we've been doing stuff well before him. But maybe I haven't wrote a book called 10X yet, and pay people to, you know, get on their platforms. But the man's a good marketer, right? The question I think most passive investors will ask is, well, do the guys operate as well as they market, right? Because just because somebody can market and raise capital doesn't mean that they've performed and have the track record and experience. Now, ourselves, you know, when we went over $500 million in assets, we started to hire other people who were much better and had industry experience. So I'm guessing Grant probably did the same way. And as you know, he self-proclaimed that he's just the marketer. any good entrepreneur, business owner hires people better themselves in other avenues, and operations, property management, asset management is definitely one of those things. That there's a lot of people who go to college and spend years and years practicing the craft. They are a lot better, a lot of industry knowledge, a lot of networks and contacts, that it just makes so much sense to hire those professionals and pay them a great salary.
For that. Whether your goal is to tell me that I'm wrong or whether your goal is to tell me that I'm right, you can reach me at Growing Up in Scientology. In this video, that Grant bought the property for $133.7 million. He marketed it to his investors at $157.6. Cardone personally profited $23.9 million by front-running his own investors. And get this, guys, don't forget, not only does Cardone pocket the difference between $133.7 million and $157.6 million, but then he charges his investors the 1% acquisition fee on the inflated purchase price of $157.6 million. It's absolutely incredible. It still brings me back to the conversation of, is it?
Well, let me know, guys. Like, put it in the comments. Like, do you think, number one, this is ethical or unethical? And then two, is this legal, illegal? I'd like to know. And for those of you guys who actually invest in deals, the third question is, well, do you even care? Right? Like, who cares what he's making on the front? Who cares what the sponsor's making, as long as you're hitting your expectation as a passive investor? Again, like, the passive investors, this guy makes it seem like they're entitled to the markup, I guess. But no, like, the way syndicator or sponsor does it is there's typically a expectation of returns, whether it's double your money in 4 years, 5 years, 10 years. Everything else, the general partner should be incentivized by that to get. And that's why you're a general partner, right? At the same way too, when deals don't perform well, that's where the general partner needs to step up and put their own money and skin in the game and get this thing going on behalf of your passive investors.
It's just immoral? Is it just horribly taking advantage of investors, or is it actually illegal? And to answer that question is not up to me. It's up to the authorities, it's up to the courts, it's up to prosecutors. But even if all you care about is whether it's immoral, whether it's taking advantage of investors, guys, if you're a Cardone Capital investor, you were supposed to be able to get in on this property at $133.7 million.
No, you
why
weren't.
you placed your money with
not.
Grant. That's what Grant promised. He said, I'm the expert. I'm the one. I can move fast. I can get the best deals. He told you that he was going to be getting the best deals for you. He didn't tell you that he was going to be getting the best deals for himself. And he was going to be using your capital to make himself rich. Even if it's just immoral and unethical, it is disgusting, and you'd have to be crazy to keep investing in any Cardone Capital deals. Guys, the signs that Grant Cardone has been up to no good and didn't want anybody looking into his business affairs have been out there for a while for all to see, even in some of Grant's stupid stories that he tells. Here's a story that Grant told about turning away a $20 million investment because the guy wanted to have some oversight into operations.
One guy that gave me 20 million about 3 years ago, the guy's name's Bob, and Bob's like, hey, I want to put 20 million in your deals. 20 million, one check. I'd never seen that before. I took the money. I said, why are you doing this? I trust you. Your name means guarantee. Grant, the word grant means he always does what he says he's going to do, a guarantee. He'd spent 3 months with me. He's like, the way you operate is just so free. And he gave me the money. And then about 5 days later, one of his employees came to my office to check on our operations. I said, oh, okay, how long are you going to be here? 5 hours. I said, good. When you leave, when you're done, come see me. I got something for you. So he goes and does 5 hours of scrutiny, due diligence, checking into everything, finishes. I said, hey, you done? You done? You want a cup of coffee or something? He's like, no, I'm good. I'm getting ready to get it on an airplane. I said, good, man. I got something for you. And I passed him an envelope, and he's like, what's this? I said, give it to Bob. He's like, what's in it? I said, you can look at it. And it was a check for $20 million. I thought Bob trusted me. I don't know what you're doing here. I don't want money like this.
This story is such obviously bullshit, but
Well, I mean, you guys have to understand that the way Grant makes a lot of his money, or the older way he made a lot of his money, was just selling sales courses to a bunch of young hustlers. So these are the type of, influencer kind of videos that really attracts those types of people to kind of power his other business revenues. And if there's one thing we can learn from Grant is multiple streams of income, right? He's got the sales thing, and he also has the sales people from that sales program to cold call other people for his deals, right? So it's genius in a way. I think that's where I have a lot of respect for Grant. Like, he creates these great sales, business, marketing systems. Has nothing to do with like real estate or the operation of apartment buildings, but it is pretty smart, I think. But that's the way, that's the purpose for one of those types of videos like that.
But I believe it is centered around a kernel of truth. Grant is almost certainly talking about billionaire Scientologist Bob Duggan. Bob was the CEO of a pharmaceutical company called Pharmacyclics and became a billionaire off of one wildly successful drug. And there was a period where Grant Cardone is, of course, a Scientologist. Grant Cardone was kind of sucking up to Bob and riding his coattails for a while and really cozying up to him. Grant had posted a lot of videos of him hanging out with Bob, Grant's family hanging out with Bob's family, doing alpha male shit, 10x, 10x. And there was some falling out. Grant tells this story as if it makes him look like a badass for turning away $20 million. But to someone who's paying attention, you would have to ask yourself, why on earth would a legitimate businessman turn away a $20 million investment just because the investor wanted to have a little bit of diligence? A straight up honest businessman is not afraid of diligence, especially when it comes with an upside of a $20 million investment. By the way, Grant can never really keep his story straight. He said he'd never seen a check that big.
Well, it's kind of a bullshit story anyway, but like, I think the takeaway, or the one thing I want to point out here for investors, is this guy Bob. He's definitely on like what we call the family office level. So family office are like $100 million families, maybe $1 billion, in that range, and they will typically take down an entire deal. Like if a capital raise is $20 million for a $50 million property, it's just a different type of investor, where a lot of Grant's investors are kind of real low level guys. Maybe he's got some higher level guys, but predominantly we call this kind of private equity or retail plus investor in a way. It's like just semi-wealthy people, just seemingly average people, $1 million to $10 million net worth. But I know Grant goes after some of the non-accredited guys with his Reg A Plus fund, which again, where a lot of these investor relations and just headaches and brain damage comes from, which I think is where that his other investigation is coming from. When you have, I was talking to there's another fund I'm aware of that kind of does something similar, and they're chatting, and like they got like 1,000 something investors, and it's like, and their average investment is like $500 or $5,000. Where with us, it's like, $50,000, $100,000 minimums, right? So we kind of are in between the family office, big money, and then your crappy, pain in the ass, super non-accredited investor that will kind of go into these Reg A Plus offerings. I don't know, good and bad about, one source and the other. The good with family offices, once you get one guy, you're done, but it's not very diversified. In case, say, Bob is out skiing, you may have to go pick him up, or maybe Bob just takes a nap and you miss out on your deal and you lose out. And I think that's what people don't realize. Like, when these deals drop contract, you have to pay, you lose $1 million, maybe a couple $1 million with all your due diligence locked up, and that's what the acquisition fees pay for. A lot of newer operators, they take the acquisition fee and they buy cars, and just like any other salesperson, right? We've always been pretty prudent about taking an acquisition fee and putting it into the business, hiring more staff, building more systems and processes. I still live in the same place, same kind. My personal expenses, probably still under like $5,000-$7,000 a month. My life still hasn't really changed. It will soon, hopefully. At some point, you delay gratify long enough, the money's just going to compound on you. It's just, at what point do you want to, kill the cows and start eating and enjoying life? I don't know. That's still up in the air for me personally. But, again, it's just more for education for passive investors out there. You get your family office and you got your small retail investor, and then kind of in the middle there too. pros and cons of all of them.
Coming from the guy who tells another bullshit story about having sent a $50 million wire to Gulfstream to buy a jet. And by the way, just as an aside, when you guys hear Grant Cardone talking about having $5 billion under management, having $5 billion of property under management, $5 billion under management means investor capital. Investors have given you $5 billion to manage. When Grant says he has $5 billion under management, he's talking about what he decides is the current market value of all of the properties that he has purchased, even though those properties are leveraged usually up to 80%. So $5 billion of property under management is equal to more of $1 billion of investor capital under management. And this has gotten so crazy that people in Grant's camp have even started to use this 5 billion figure as now that's Grant's net worth. And this brings...
Yeah, so that 5 billion number, assets under ownership, assets under management, same kind of thing for the most part. $5 billion definitely puts them on the institutional level. Usually I would call institutions maybe $1 billion, $2 billion plus. There's certainly some large firms like, like Invesco or some of the big ones, or BlackRock. You go look up their assets under management. It may be bigger than 10 or 20, I believe. But you get above $1 billion, you're big size. Certainly over 5, 10, you're getting much, much bigger. And then also, this guy's also saying that another thing I want to point out too is you can't only go by assets under ownership, assets under management. There are a lot of folks out there that will just raise capital, to me, kind of illegally. They'll bring in $250,000 into a big deal that is, raising $10 million. And then they'll now say, now we own $120 million of assets under ownership, right? Which is all BS because it just got kind of rolled on the coattails. But people will build this facade and their fake profile and put it on their website as they have $400 million of assets under ownership and assets under management. So that's where things get a little bit very difficult for passive investors to really cut through the smoke and mirrors on this.
Up yet another factor. The fact that Grant raises his investor capital through social media, combined with the fact that Grant lies on social media about being a billionaire, that is fraudulent communication. I don't know if it rises to the legal level of fraud. But if Grant is out there trying to get you to give your investment money to him, and as part of doing that, he is lying to you about being a billionaire, it's just, even if it doesn't rise to the legal level of fraud, because I just don't know, you still have to take that into consideration. Why would you give your money to someone who misrepresents themselves? If they're lying about the little things, they could be lying about...
This is the point in English class where you're writing a paper and you're on your third and fourth point and they're not super strong, but that's why you led with the other stuff first.
The big things. As we can see, Grant lies about the little things and he lies about the big things. It's hard to know if anything out of Grant Cardone's mouth is actually true at all. In my line of work, you do not talk about...
Well, everything Grant's saying is not, it's stretched, but it's not like untrue and non-factual in my opinion. And this is where I tell passive investors, like, this is all a marketing game, really, as you've seen. Grant Cardone is kind of on the spectrum on that. At the end of the day, how do you know who to trust with your hard-earned money in these private funds? Well, building your network with other purely passive accredited investors. That's why we have the Mastermind. That's why we have the investor retreats in Hawaii. We do little pop-ups here or there. Say join the club, SimplePassiveCashflow.com/club to get access to those events and build real relationships with other purely passive accredited investors, and stop going to all these like fake it till you make it fake real estate conferences with wannabe general partners who are just trying to have you be their friend, family, and fool into their first, second, third, fifth deal.
About your clients, you do not talk about your projects, but there's only one client who has publicly discussed the work that I did for him, and that's Bill Ackman in his battle against Herbalife. I helped Bill in his investigation.
All right, well, I got an investor call I gotta go to, folks, and this video is gonna getting long, and this guy's points are getting a little lame. Again, this is not a disrespect to Grant. This is not a promotion to Grant. I don't invest in his deals. I probably won't. I only work with people I know, like, and trust. But hopefully this was insightful for some of you guys. And thanks for watching. If you guys have any other ideas of videos or things you'd like me to go through as a operator, syndicator myself, let me know.